I think the pandemic has forced us all to move towards Zoom calls, hasn't it? I mean, this is my new office. This also happens to double as my dining room. And it's interesting. When I think about LPs, we had generally seen everybody in person twice a year, once at our annual meeting, once at our LPAC. I often get out on the road and try and see my LPs in their offices so I can meet their broader teams. But what Zoom has meant is we could actually stay in touch more frequently. I'm finding myself doing a lot more update calls in a lot shorter duration, and it keeps the connective tissue stronger. So I think we're all finding new practices. My guess is these practices are going to continue. One thing that's become really clear during the pandemic is just how much technology is playing a role in driving forward the economy. And it truly is happening in every sector. So I'll just give you some obvious examples. One is telemedicine. We're seeing every one of our healthcare providing companies accelerate the way patients and the way doctors are communicating with each other in ways that I think we always knew would happen. But it takes social change, it takes regulatory change for this to happen. So, we're seeing that across the patch. Another example, we know that there was a need to accelerate drug discovery. We knew there was a need to accelerate regulatory approval for different drug types and for different treatment types. We've seen with the coronavirus the acceleration of mRNA treatments, and we have been funding some of those and testing platforms. And I think you're going to see an acceleration on that. But then let's talk at the fundamental level. Let's talk about things like agriculture and production of food overall, and looking for alternates to, for example, meat products and the impact in global warming. All of these things are being solved by technology. And I think we now see that there's a direct correlation between real world impact, things like how do we fight forest fires? And we're seeing investment go into, in fact, I have a call today with a company trying to combat forest fires. It'll be my first call with them. But we're spending way more time on real world problems and how technology will solve that. And so, in a way, yes, I think everything is going to be driven by technology. Disruption, as maybe Clay Christensen defined it in his seminal work, The Innovator's Dilemma, is something I think a lot about. And I think the term gets used in a lot of different ways, but let me talk about disruptive technology as defined by Clay Christensen, who sadly passed away recently. What he defined it as is industries in which you decreased price, decreased margin, created a less functional product, but that was suited to more market masses. So I've taken to calling that deflationary economics, and thinking about the internet, that's really what it achieves. It crushes margin, it crushes price, but it delivers a greater good to consumers and it increases the total addressable market. The example that he gives from his book is the Sony Walkman. When the Sony Walkman came out in the 1980s, it wasn't competing against stereo equipment, it was competing against what he called non-consumption. So now let's fast forward to Robinhood. I think it's the topic that everyone's talking about this week being in January 2021 with the shorting of GameStop. If you look at Robinhood, what did it do? It didn't compete against Schwab or TD Ameritrade. It came out with a totally different offering and made it free. And what it did is it competed with non-consumption, because there were all of these really young, inexperienced, maybe first-time traders who wanted to learn more about the markets, but found the fee structures of the behemoths inaccessible or unaffordable, and they were unwilling to participate. And they welcomed in a whole new generation of investor. Now, if you look at the internet, what the internet is great at doing at scale is organizing groups of people to take action. And they took action this week on Reddit, and we're seeing the consequences of that. And that kind of disruption, it's going to continue. I always say that technology is a dual-sided knife in which on one side we see very clear benefits. So take, for example, social networks. Social network is a ongoing continuity of bringing communication tools to the masses. And that's generally been a good thing if you look back at radio, if you look back at printed newspapers, if you look back at television. But every technology is a dual-sided knife in that there's also a side that can be devastating. So if you look at radio, I think no one could argue that radio wasn't a social good overall and helped to spread democracy. But it was also used by Hitler in the run up to World War II as a propaganda technique to cut out media people, communicate to the masses, and stoke populism. If you look at Twitter, it's been a great social good for people to flatten the hierarchies that exist, but it was used by Donald Trump in the exact same way to stoke populism. And it's actually one of the tools that was used to cause an insurgency in our own country, an insurrection against a department of the US government. So every technology, whether it's helping us grow alternative meats, whether it's helping with food distribution, whether it's helping create disruption in the taxi market, something like Uber, they bring a lot of positives. They also bring some negatives. So as a framework for government oversight actually in a managed way is a good thing because it has to balance the social good and the social consequences of every new technology. Well, the interesting thing about limited partners coming to see a venture capital fund like Upfront Ventures is that in many ways, we're no different than a VC going to approach a CEO. If you're talking to CEOs as a VC that don't have a lot of access to capital, it's relatively easy to reach out to them. If you're reaching out to CEOs for whom they have a lot of capital coming at them, they generally aren't that interested in catching up because they're overwhelmed with requests. So the best way to get access to venture capitalists like Upfront Ventures is to find people that already know us. Reach out through entrepreneurs, reach out through other VCs, reach out through relationships that you have. Yes, you can cold inbound to VC funds, but the reality is that if you are cold emailing VC funds that have significant demand already to invest in their funds, they probably are not that open to taking meetings simply because they're super busy on time. But if I get a call from a colleague of mine as a VC who says, this LP, I know them very well, I can vouch for them. You may or may not have capacity in your fund, but they're incredibly well connected, valuable, have insights that other people don't have. I think it's worth your knowing them. I'm likely to take that call. So just take the same approach that we would take to get access to entrepreneurs. We always look for ways to get introduced. The most interesting thing about being a venture capitalist is you have to understand market trends before other people. So if I'm investing in the thing that's most obvious to people listening to this call today, this podcast or a video interview rather, I probably am too late because it means that a lot of people know about it. You only make money in disruptive technology when you are early in the trend. Now, you can't be too early. They say too early is the same as being wrong, but you have to be early. And so I have to have a bet on the right market, and then I have to bet on the right team. So it's not good enough. I actually bet on a free text messaging platform at the time free text messaging platforms took off. I just didn't bet on WhatsApp. And so you have to back the right idea and the right team at the right time. And that's really hard to do. So when I'm talking with LPs and I'm describing the areas in which we're investing, I like to say I'm generally trying to make LPs a little bit uncomfortable because if I'm telling you what I'm investing in, you should be scratching your head. In 2013, we had a thesis around water conservation and around agriculture production. So we started making a series of small bets. We invested in a small company called Appeal Sciences. And what they did is they took the extract from plants, organic compounds, and they create a film that seals in moisture and prevents oxidation. And what it does is it gives you 30 days extra yield on crops, and it doesn't require refrigerators. And people said, like, why are you investing in that? So fast forward, in 5 years, it's now a $1 billion company. It's attracted people like Andreessen Horowitz and Viking Global and GIC and Temasek and many other great investors, DBL. And there's a reason, which is if you want to invest what matters in 3 to 5 years, you need to understand what problems and opportunities exist in the world in 3 to 5 years that are unique. And also, what platform shifts are we going through that are going to make the timing of those things right? So, we're looking right now a lot at fire. Fire is something that we think is going to matter greatly. We're looking a lot at cybersecurity. You look at the attacks on the US government recently. We're looking a lot at still food sustainability, not just production, but sustainability of fish, sustainability of plants and animals. And all of those things are problems that are going to be solved by technology, and Upfront Ventures wants to be at the forefront of that.